No, whenever I hear the name Nokia, my brain immediately goes back to the early 2000s. I picture that indestructible brick of a phone playing Snake, battery lasting for a week. It feels like a relic, but looking at the data in front of us today, that nostalgia might be the most dangerous thing for an investor right now. We are looking at a company that is trying to tell a completely new story, an AI infrastructure story, but the numbers are telling a very different, much more complicated tale.
It is the classic identity crisis, isn't it? You have a legacy brand trying to pivot into the most cutting-edge sector on the planet. We are analyzing a report generated on March 21st, 2026, from the U.S. Stock Picker podcast channel name U.S. Stock Picker Podcast. And the headline here is Caution. We are looking at a hold recommendation with a confidence level of roughly 65%. The market is essentially saying, we hear what you're promising, Nokia, but we don't see the money yet.
That's the show me phase. It's the most frustrating place for a stock to be. You mentioned the promise versus the money. Let's dig into that disconnect. Because on the surface, the narrative sounds fantastic. They are moving into AI-optimized networking, data center infrastructure, everything the market usually loves. So why is the recommendation to hold back?
Because you cannot pay high growth prices for zero growth reality. That is the core friction here. Let's look at the valuation disconnect. Nokia is currently trading at a price to earnings ratio, a PE, of roughly 43x. Now, usually when you see a multiple that high, you expect revenue growth to be exploding, double digits at least. But Nokia, their revenue growth for FY 2025 was negative. It shrank by 0.6%.
Wait, let me pause you there. A 43x PE for a company with negative revenue growth? That sounds incredibly expensive. That's pricing in a perfection that simply isn't there yet.
Exactly. It is difficult to justify, and it gets tougher when you look at the earnings per share, which plummeted by over 52%. So, investors buying right now at around $7.98 are paying a premium for a turnaround that hasn't hit the balance sheet yet. It is purely a speculative bet that their new product suite will suddenly ignite.
So, let's talk about that product suite. If the financials are the anchor dragging them down, the technology is supposed to be the sail, right? What are they actually building that justifies this AI pivot?
This is where the analysis gets interesting, and frankly, a bit more optimistic. On March 16th, just a few days ago, they released news about new AI-optimized optical solutions and PON-based data center management. In plain English, they are building the plumbing for the AI era. You cannot have massive AI models running without incredibly fast, efficient data transport. Nokia is trying to position itself as the critical infrastructure provider for that.
That makes sense conceptually. It's the picks and shovels strategy. You don't bet on the gold miner. You bet on the guy selling the shovels. But is this new tech actually translating to sales? Or is it just press releases?
Currently, it is mostly press releases and strategic positioning. The analysis from the U.S. Stock Picker podcast points out that while these are high growth areas, they haven't translated into significant top-line expansion yet. The telecom operators, the big customers, are still tightening their belts. They spent billions on the initial 5G rollout, and now they are in a spending freeze. So Nokia has the right tech, but their customers have their wallets closed.
That is a tough spot. You're all dressed up with nowhere to go. I want to shift gears to the market sentiment because that often moves faster than the fundamentals. The report mentions some interesting movements with smart money. What is happening behind the scenes with the institutional investors?
This is a major red flag for the short term. While the retail crowd might be buying the AI hype, the insiders are taking chips off the table. We saw a senior manager dispose of 150,000 shares recently. And more importantly, Aquatic Capital Management, a major institutional player, trimmed their position.
That is never what you want to see. When the people inside the building and the big funds are selling, it suggests they think the price has peaked for now.
Precisely. It signals profit taking. The stock had a run up to a high of $8.82, fueled by that AI narrative, but it couldn't hold it. It's now pulling back, testing support levels. The technical analysis calls this no man's land. It's too expensive to be a bargain, but it's lost the momentum to break out. It's stuck.
No man's land is a dangerous place for a retail investor. You don't want to get caught in the crossfire. But let's play devil's advocate for a second. Nokia has a massive patent portfolio, right? And the report mentions their balance sheet is actually pretty solid. Is there a safety net here?
There is. That is the one saving grace. Their debt-to-equity ratio is very low, around 0.25. They aren't going bankrupt. They have a fortress balance sheet. This isn't a company in distress. It's a company in stagnation. The risk isn't that you lose everything. The risk is dead money. You park your capital here hoping for a pop, and it just drifts sideways for 12 months while the rest of the tech sector moves.
That opportunity cost is real. If you're tied up in a stagnant stock, you're missing out on actual growth elsewhere. So, looking at the technicals, the charts are painting a specific picture. We are seeing a short-term downtrend. Where are the lines in the sand? If I'm listening to this and I really believe in the Nokia turnaround, where should I be looking?
The technicals are very specific here. The stock is currently failing to hold the $800 level. The 50-day moving average is down at $7.28. That is the critical zone. If you are desperate to buy, you do not buy at $7.98. You wait for a pullback to that $7.25 to $7.30 range.
So, patience is the strategy.
Aggressive patience. The report explicitly says, do not chase the stock here. The RSI is neutral. The MACD has turned negative, which means bullish momentum is gone. It's a falling knife scenario in the very short term. You let it hit the floor before you try to pick it up.
It's interesting, isn't it? We often talk about investing in the future, but this feels like a case where the future is priced in, but the present reality is dragging it back. It raises a philosophical question about the market right now. Are we just slapping an AI label on legacy companies and hoping for the best?
That is the multi-billion-dollar question. Nokia is arguably a turnaround play disguised as a growth stock. The bulls argue that the data center pivot will eventually explode. The bears argue that they are a low-margin hardware business in a competitive duopoly with Ericsson and Huawei, trading at a software multiple. The report from U.S. Stock Picker podcast leans towards the bears for the immediate future. The fundamentals score is only 50-100. It's just too weak to support a buy rating.
It really highlights the difference between a good company and a good stock. Nokia might be a fine company making good products, but at 43x earnings with negative growth, it's a bad stock setup.
Exactly. And until we see a beat and raise quarter where they actually upgrade their guidance and show revenue growth, the stock is likely to remain range bound. The catalyst has to be financial, not just another press release about a new optical switch.
That's a great summary. We need to see the receipts. We need the cash flow to match the press flow.
We do. And for anyone holding the bag right now, the advice is to hold. Don't panic sell, because the dividend and the balance sheet provide a floor. But for new money, look elsewhere or wait for a much cheaper entry.
All right, let's bring this home. We've covered the fundamental disconnect, the technical breakdown, and the sentiment split. For our listeners who are looking at their portfolios right now, wondering what the specific move is, let's break down the final strategy. Give us the concrete steps based on this analysis.
Let's lock it in. Based on the U.S. Stock Picker podcast analysis, here is your execution plan for Nokia.
First, news sentiment analysis. It is mixed. The product news is positive and AI-focused, but the institutional action is negative. The smart money is selling into the strength, which is a major caution signal.
Second, Fundamental analysis. This is weak. The score is 50-100. You are looking at negative revenue growth and a massive 43x PE ratio. The valuation simply does not match the current growth profile.
Third, swing trade analysis. The signal is wait. The momentum has shifted bearish. The 4H chart shows a breakdown. There is no clear entry trigger right now, and attempting to go long here is fighting the trend.
Fourth, when to start investing. Do not invest today. You need to wait for stabilization. The optimal time frame to revisit this is when the stock tests its stronger support levels, likely in the coming weeks or months.
Fifth, what price point to start investing at? If you are bullish long-term, set your limit orders closer to the 50-day moving average. That is the $7.25 to $7.30 range. Do not pay nearly $8,000 for this.
Finally, when to leave the market and at what price. If you are currently holding and the stock breaks below the 50-day SMA of $7.28 decisively, the bullish thesis is damaged. To mitigate risk, a stop loss or exit point should be considered if it falls below $7.20, as the next support is significantly lower at $5.80.
Clear, concise, and cautious. That's the verdict on Nokia.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We make no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing.
Clickbait video. Title: AI, Pop Stocks, or Trap? Nokia's Upside Potential and Technology Stock Predictions. Stock Stow Trade Podcast Growth. Stock Picks.